Yes, sir. Yes, man. How you doing?
Very good, very
Yeah,
good. How are you?
man. I'm great, man. This is awesome. I'm glad to have you here. Achille. It's been a while.
Man, it's been hectic. I've been having a lot of work lately with my book that just got published,
Nice.
and I've been interviewing, and it's been a roller coaster, and
I
so
know. I believe it.
I'm very pleased that we can do this finally
Awesome.
because it was something that we planned a long time ago.
That's
So
great, man. That's great. Listen, I want to take the time. I know my phone is ringing. It's always ringing. My assistant is gone for the day, so but it's all good. It's after 5, so they'll leave a message.
yeah,
But folks, let me introduce Mr. Achille Ekeu. So let me give them your bio so they know who we're speaking with.
that's right.
All right, Achille Ekeu is a native of Cameroon, born on January 22nd, 1968, and has lived in Maryland since 1998. He's a former bank manager who progressed through the ranks from teller to vice president with Chevy Chase Bank and PNC Bank since 2013. Wow, that's awesome. From a teller.
Yeah,
All right.
yeah.
All right, man. Achille is a certified valuation analyst, that's CVA, member of the National Association of Certified Valuation and Analysts. He partners with business owners, attorneys, business brokers, and financial planners to determine the value of companies that they own and that they represent. He is the founder, president, and CEO of the Washington Valuation Group, LLC, a business valuation boutique firm that focuses on helping clients with business valuation needs for tax purposes, estate and gift tax, transaction purposes, purchase, sale, buy, sell agreements, and we're going to talk about that too because that's important for a lot of business owners, and litigation purposes, divorce, that's important. People go through that, and you have business, so we'll talk about that too. Shareholders and partnership disputes. He obtained his bachelor's degree in mechanical engineering in 1992 from the University of Douala in partnership with the University of Montreal, Canada. Achille obtained his master's of business administration, MBA management from American Intercontinental University, AIU in Chicago, Illinois in 2004. He's a multiple awards winner and a philanthropist. He's a book author and a public speaker. He enjoys playing golf, basketball, and jazz. Man, you play basketball? All right, man. All right. Piano. He shares his thoughts on podcast, radio, internet, TV, blogs, and social media, LinkedIn, Facebook, Twitter, and other. He's married with 2 children. Man, awesome, bro.
Thank you,
I'm
thank
glad
you,
you
thank
come
you.
on my Facebook Live and share some knowledge because I'm always sharing some important things. And when I run into a friend that you just published your book, so I like that. And we have a lot of business owners and entrepreneurs that are out there trying to build their business, but one thing that they don't realize is how important it is to have your business valued. So we want to talk about that, and I'm going to ask you some questions, and and then we want to see who in the audience also has questions for us as
Yeah,
well. All right.
Absolutely, absolutely.
So now tell me what is a business valuation?
Okay. Thank you so much. Before I answer that question, I want to thank you and the audience that you built over the years. Now, and I think I've been watching some of your videos and with a lot of pleasure and I hear and I see how you educating people about life insurance and things like that, and that really touched me. And I said, wow, this is really how useful social media are, and so it's a good way to educate people.
You have to.
So absolutely. So I am also on social media, and we're going to talk about that later. But I just want to say, kudos for what you're doing.
Well, appreciate
and
it.
when you approached me about this idea of doing this, I thought, wow, this is something that could be useful to your audience and beyond.
Big time.
Absolutely. So, what is business valuation? Business valuation is the art and science of determining the value of a company,
Okay.
or an interest, as we usually say. Well, where does that come from? Business valuation comes from way back in the 1920s when Congress passed what was called prohibition law.
Okay.
Okay, it was called the 18th Amendment, and back then, what the 18 amendments was designed to prohibit, as you know, hence the name prohibition, to prohibit the manufacture, the sale, and the transportation of alcoholic beverages.
Okay.
You know, throughout the United States. And so, in doing so, that law created a situation that had to be resolved, because those small businesses that were involved in that industry, they lost a lot of money. All right, because they went out of business and they lost a lot of money. So after it was abolished in the 1930s, after that prohibition law was abolished again by Congress in the 1930s, the IRS, the Internal Revenue Service, decided, promulgated something called appeals and appeals and revenue memorandum 34. Appeals and revenue memorandum 34.
The IRS always makes the big names and stuff just to confuse the heck out of people, man.
Yeah, you know, that's the title of the law of the regulation that
Right.
they came up with. So we have to call it for what it is. So
Right.
they came up with that regulation to regulate how those businesses should be valued, for
Right.
in order for them to be compensated for the losses that they incurred.
Okay.
So that was the idea. And so since that time, business valuation became a whole industry from that time to today. A big industry that's worth about $6 billion today.
Nice. That's
So,
awesome.
Absolutely.
You know, now why would any business owner need a business valuation? Because we have so many people that are entrepreneurs. They're just starting the business. You know, they might say, well, this is not something that I need right now.
Right. So and this is always something that I hear. Why do I need a business valuation? I mean, why should I spend $1,000, maybe $5,000, maybe $10,000 for business? Why? Is there any reason for that? Well, think of it this way: when you have a business, you're creating value every day.
Right.
Your business is growing, and there's a lot of value creation that's happening in your business.
Okay.
So if you don't track that value creation, how will you know that you're reaching your goal? Usually when you start a business, if you're somebody who's serious about his business,
Right.
you have a goal, you have
That's
some
the key.
projection, you have some plan,
Right.
you have some objectives, you have some numbers in your mind. So let's say if you want to set that business for, let's say, $5 million in maybe 10 years or 15 or 20 years, whatever
Right.
time frame you decide, you have to start planning backward, right, from the $20 million value that you're looking for, and plan backward to break everything down so that you will be able to know where you are at a specific point in time. And the best way, the only way for you to track the value creation
Right.
that's happening in your business is through business valuation.
Right.
So that is the one critical, important reason to have a business valuation done on a regular basis. Now, there are also situations that you have to do business valuation, regardless whether you want it or not.
Right.
If you want to sell your business, for example, at some point you want to retire, you want to sell your business, you have to do a business valuation so you know how much it's worth.
Right.
If somebody wants to buy your business, he also can request that business to be valued.
Right.
So the business valuators can work both for the buyer or for the seller, right? So he could be hired by the seller or
Because
hired.
I've seen people sell their business,
Right.
and I normally ask them, how did you come up with the value? They're like, oh, I just, figure. And somebody's buying that business not really knowing what the business is really worth.
Right.
Or somebody's selling the business and they might sell it for a low value because they didn't evaluate it properly.
Exactly. That's usually what happens. People
Right.
leave a lot of money on the table,
Right.
because they don't have the proper valuation of the business. Now, we have to not confuse value and price. Valuing and pricing are two separate things. All right, let me just explain that very simply. If you have a house, usually when you want to buy a house, you go see a real estate agent.
Right.
He's going to show you houses in your area you're looking for. So those houses in that neighborhood are selling for a certain price. So most likely the house you're going to find in that neighborhood is going to sell around the same price.
Right.
So that's pricing. It is not very specific to that house.
Got it.
Whereas valuing takes into account tangible for business. In this case, for business, it takes into account the value of tangible asset. Tangible means things that you can touch, like the machines, your inventory, things like that. Tangible assets and intangible asset, things that we can see, we can touch, but that has value.
That has value.
For example, your patents. If you have a patent, you have a certification.
Right.
You have some license. If you have a license, that has value. If you have some invention that you did, about something, about product or maybe a process, things like that, those things have value.
See, people don't think about those things.
No, they don't think about those things. Even the experience of your employee, how long your employees have been working for your company, how long, all these things are intangible that have value. Because when somebody wants to buy a business, he's going to find out, hey, how many employees you have, how long have they been working in your company. So if the people have been working there for 15, 20 years, that's huge. That's huge.
Big, yeah.
So he knows that by buying a company, he's not going to start from scratch, because people are already trained, they're all well trained, they've been well experienced. So that has value. So if you buy a company that has a lot of value like that, a lot of experienced employees, you have to ask for a higher price. So all these intangible have to be factored in to come up with the value of the company.
That's important.
That's how we come up with the value of the company, and then therefore you can just price it. So you have to do a valuation for that kind of situation, for that type of situation. Now there are other situations like if you pass away,
death.
If
somebody dies, right?
Somebody dies.
Yeah. I know you try to put it nicely, pass away. They die. They're going to die. I mean, death happens. That's why we preach about making sure you have the right, proper life insurance in place. People are going to die.
Absolutely.
Now, when you pass away and you have a business and you didn't value it, guess who's going to value it for you?
Exactly. So we have to do what's called an estate valuation.
Right.
All right. So an estate valuation, that means the probate court is going to...
Who orders that? Who orders the estate valuation? The government?
Where the IRS has to, because you have to pay taxes.
Right.
You have to pay taxes on your estate. So in order for IRS,
so listen, folks, you all hear that, right? You gotta pay taxes on your estate. Now, let me explain something about that, because a lot of insurance agents tell you about how life insurance is tax free. No, it's not estate tax free. So if it's not structured properly, and I always stress that when I talk about life insurance, making sure it's structured properly, which some people just flies right the head. It has to be structured right so that it can stay out of estate taxes. There's ways to make it work for you. But go ahead about estate tax.
Right. So estate tax has to, so evaluation for estate tax purpose has to be done, because the report that the valuation expert is going to issue is going to go to the IRS.
Right.
And the IRS is going to read that report to figure out how the expert came up with that number, which is the value of the company. And if they agree with that, then everything is okay. So they're going to send a tax bill to the estate administrator of the company, and then that's how he's going to pay the estate tax.
So let me ask you, does the IRS have their own valuation?
Absolutely. Absolutely.
So they'll, if you don't have one, they'll provide one. And they're not gonna value it at a lower price, right? Because they need to make more money.
Well, the idea is, if you don't do it properly, they may reject. Even if you hire somebody who's not properly certified or trained to do a business valuation for estate tax purposes, that report could be rejected. Therefore, the money that you spend to pay that expert is going to be gone. You have to do another valuation. And they will tell you they will probably have to recommend certain type of people that you need to contact to do that work. And so and sometimes it goes to court. Sometimes things like that go to court because what happens if let's take an example to be more specific, right? So if somebody values your company at $1 million, right? Because whatever, he just came up with that number. And the IRS feels that, no, this company is worth $5 million, not $1 million.
No.
Well, the reason it probably came up with that $1 million is probably because it's trying to save,
of course,
save
he's trying
taxes.
To blow ball,
Right. So he's trying to low
doesn't
ball.
want to pay the taxes,
Exactly.
pretty much. So the IRS is going to make it
Right.
what they're worth and say, hey, your business is worth $5 million.
Exactly.
Your family needs to pay us
this
amount, $3 million.
Yeah. So they're gonna revalue the company, and do their own valuation on
Right.
it, and then say this is what the number should be based on, you know, what the valuation process and the valuation.
And they count everything when
Right.
it comes to,
Yeah.
you know. So let me explain what we mean by that. They count life insurance
All that
as
stuff.
part of the estate.
Yes.
So if you currently have, let's say, you know, a life insurance contract that is, let's say, $2 million, right? And you everything else, your business is worth another 4 million. You know, so now you have 6 million. And then when they count everything else, now you are, let's say, 10 million. And you're thinking, oh, you know, well, you're dead already. But your children are thinking, we got a 2 million. No. Because the life insurance contract was, you are the insured and you pick the beneficiaries or whatever. Because you're the insured. There's no other owner on it. It's just you.
Right.
Guess what? Your children got to pay estate tax on all that money.
Absolutely.
Yeah.
Absolutely.
That's crazy.
I think you're explaining very well. So yeah, so absolutely. So that has to be done. So if it's undervalued, the IRS is going to make sure that it's
All your
valued properly.
sorry, there's some people that have Bitcoin, they have they have gold, they have precious metals, and they advertise on Facebook.
Right.
I got this, I got Bitcoin, I got precious metals, I got gold, I got all this stuff. I'm investing in the stock market, but all of them
They're
are
going to be
buying.
valued. Yeah, we're going to value all of them.
Wow.
See, when you hire somebody like me,
Right.
I'm going to ask for everything that you have.
Right.
I'm going to all the document, any investment that you may have, any savings account, any investment in bitcoins or in stocks or forex, anything that you.
Right.
So I'm going to need to have all the information so I can properly value the company.
Right.
Because doing anything less than that, you know, is undervaluing the company.
Right.
And
How about people that get 1099s from some of these, you know, there's a lot of multi-level marketing companies out there that pay their, you know, reps 1099. How about those people? Because a lot of them make a lot of money, but it's in there, they might have an LLC and all that stuff.
Yeah, we need all of that. All
Right.
the information
Okay.
too. They have another business on the side.
All
That's
that.
income.
That's
Yeah,
income.
We need that. Yeah.
Yeah.
Yeah. Now, every business has to be valued specifically. If you have 2, 3, 4, 5 businesses, you know, let's say the person who passed away has many businesses, we have to value each one of them.
Right.
Okay, and then come up with a total number, and then each one of the valuation has to be has a report that has to be issued,
Right.
and then they're going to be taxed accordingly. So that's the process. Yeah. So each one, we're not going to lump everything together
Right.
and value. No, we're going to value each business by itself, and then each report is going to be sent to the IRS, who's going to then make sure that every business is valued properly. If
right.
it's not done properly, they're going to reject that report, and that's going to ask you to do another valuation. So that's why it's important when it comes to business valuation to hire a certified valuation analyst.
That's good.
Somebody who knows.
I mean, they got to,
process.
you know, and that brings me to the other question is, how much does it cost to have something like that done?
Right. So the cost is always a very variable issue.
Right.
It all depends on the specific case. Now, I can tell you a range, let's say, and also it depends. It depends on several things. It depends on the type of valuation you're doing. A valuation for estate is more expensive than a valuation for the sale or for the purchase of a business.
Okay.
All right. So because the estate valuation requires the highest level of quality assurance.
Okay.
So it requires a report that has to be very well detailed. You know, for the same reason, for the reason that I mentioned earlier, the IRS is going to get that report, and they want to understand every single detail, how you came up with that number.
Came up with the numbers.
So they want to read and explain all the explanation. So that is more expensive. But so we have estate valuation for transaction, purchase, sale, and we have valuation for estate tax, gift tax. We also have litigation. We didn't talk about litigation. Divorce,
yeah.
partnership disputes. If you are a partnership and you separate, you part ways, you need a business valuation as well. In that case, for every partner to get his shares of the equity of the company, and so it's important that that we talk about that as well. So the price is going to vary depending on which type of valuation you're doing, but it could go minimum maybe $3,000 to, you know, for litigation purpose. Now litigation, the issue of litigation is if you are if you hire an expert to testify in court,
Right.
so that could drive
That's
things
additional
because
cost.
the schedule of the court is always determined by, you know, the judge, so no one really has control over that. So the fees could add up and things like that. So
Right. I got it. That makes sense.
And then so that's why, you know, an expert, you know, in this case, is paid hourly. It's an hourly
of
rate
course,
because he doesn't know how long it's going to take, and then, you know, so you don't know how long it's going to be. So
Okay.
so right.
So that makes sense.
It
I
makes
mean,
sense.
you know, and there's a lot of folks that have, you know, people always ask me about buy-sell agreements. You know, how is that? Can I get a buy-sell agreement insurance? I'm like, buy-sell agreement is just a contract. Then you have to fund it. But to determine what is in that buy-sell agreement, you actually need to evaluate the business. See, so a lot of times people want to, I want to get a buy-sell agreement, but they don't understand. You got to get a valuation of your company first.
Right.
And go to a CPA to do it. I mean, tell us about that. Because some people use their CPA and say, okay, he's going to tell me the value of my business.
Okay. Now, if the CPA is a certified valuation analyst,
Most of them are not.
What? No, I'm just saying.
Right,
a CPA who is a certified business, who's a certified valuation expert, cannot be the one doing your documents,
Okay.
your
taxes,
your financial document,
right,
and then do evaluation.
Right.
He cannot do
No,
that. So somebody else has to do it because of conflict of interest, right?
Right.
So now, a buy-sell agreement is an important document that every
Very important.
small business owner should have.
Yes.
The minute you start the business, you're gonna set up the parameters of your buy-sell agreement. Why do we emphasize that? Things happen in life. Okay?
Yep.
You can have an accident. You can, you can pass away.
Yeah.
You can have an accident.
You could be
You
disabled.
could be
Different
disabled.
things happen.
All kind of stuff happen. So you have to plan for those type of situations ahead of time.
Right.
So a buy-sell agreement is going to delineate. It's going to delineate what steps needs to be taken when a situation like that arises,
Okay.
especially among shareholders, right? So, in a business that has 2, 3, 4, 5 shareholders, they need to know if I retire, if somebody has an accident, if somebody passes away, how are we going to buy his shares?
Right.
So the buy-sell agreement is going to say if somebody passes away, this is how we're going to do in terms of buyout. We're going to buy his shares by, let's say, getting an insurance.
Yeah, get a life insurance
policy on the head of that person, so that when something happens to him, then we can take his life insurance policy and then cover that, and
Exactly.
then buy his shares out. So that's a critical document that every small business should have.
Very, very important.
So,
now, how about small businesses that don't have shareholders?
Right. So if you don't have shareholders, you still have to have some type of buy-sell agreement that allows your heirs to at least understand that, okay, if this happens, this is
So basically, two business partners. You
Right.
know, let's say you and I start a business, right?
Right.
So here's why buy-sell agreement is important.
Right.
So you all get the reason why you need to have it. Him and I start a business, right? We start building a business. We're making money. Things are going well.
Right.
He's married. I'm married, right?
Right.
But the question I'm going to ask you and say, okay, as a financial advisor, what I normally ask clients is, do you want to work with his wife? And the answer is going to be no. I mean, he don't want to work with my wife. I don't want to work with his wife.
Right.
The reason is because the relationship that we have,
Right.
she don't have that. We don't have that. Even though all our families are hanging out, we're doing Christmas vacations together, that don't mean anything when death happens.
Right.
Or disability happens, because the other person is going to come in
Yes.
and say, well, you've been ripping my husband off all these years.
Yes.
The next thing they go get there's always a willing attorney that's willing to take your money.
Definitely. Absolutely.
So they're going to come in with the attorney and come in and say, what? I'm suing the company. Now, you got to come up with the money to either buy the company from her or sell the company to her. That's what a buy-sell agreement is. Between both parties, we have to do that ahead of time.
Right.
Before anything happens, to say, okay, this is how much we believe our business is going to be worth because we valued it, and we're both going to split that 50-50, and then we'll get insurance on each one of us to make sure that if something happens, that insurance policy is going to pay out. Either buy the business from the other person or sell it. That's what that means.
That's what exactly.
All right, cool.
Yeah, absolutely. Very well explained there. So, Yeah, so buyer agreement is an important document, and it's also, delineates, tell, stipulates how they want the valuation being done.
Right.
So they want it to be done every year. They want it to be done, in a different way. If they have a specific expert that they like, that they agree to go to in case of a trigger event. We call that trigger event.
Right.
If a trigger event happens, it can say, okay, we're going to hire this person
to do
the valuation because XYZ reason.
So somebody was asking me on Facebook, hey, thanks to everyone that's joined on Facebook. We appreciate you for tuning in. Antonio Cheeks, I see you. Mark tonight. Connor Mole, how are you, man? Hey, Anthony's asking, do I don't do valuation. I hire people like Achille to do it, and that's why we're having this conversation to help you, as you have your business, to help you understand why you need to get one done. But his company, which is the Washington Valuation Group, and you actually wrote a book that we want to talk about how. So for those of you that are online, the book is 30 frequently asked questions in business valuation. You need to get a copy of this book. How much is the book? So
it's $19.99.
$19.99. Where can they get it?
They can get it online on my website, www.washingtonvaluation.com
right
/shop.
Okay.
So Washington Valuation, in one word, washingtonvaluation.com /shop.
Let me have that let me have it up actually so they could see it. Let me grab that.
Right.
So let me go back. And I'll grab it for you guys so you all could see the website and be able to grab a copy of the book and use it. Because it's so important.
So well spent $20.
It is big time. So that's the name of the company. You could see it online. It's Washington Valuation Group.
Washington Valuation
Group.com.
Right.
Online, and you could go on shop and get a copy of the book and all the good stuff. So what's your contact number for them to contact you?
Oh, they can call me directly over the phone at 240-274-9570.
Okay.
274-9570.
Okay, awesome. Awesome.
There.
So anything else you want to tell them about, and again, there's couples that have businesses together, husband and wife. They start a business, and they don't plan nothing happening, and the husband puts all the money in the family business. And they okay, this is the business. I'm gonna make it work for you.
Right.
I mean, it's very, very important.
Right.
To have a valuation, folks. It's very, very important.
Right.
And get that done so that what happens, because you got to separate that. Why that's important for people to have during that situation.
Right. So if you're married, the assumption when you're married is that you trust each other.
Right.
That nothing is going to happen, but things happen.
Yeah.
So, but in any case,
it's a business decision. It's a business transaction.
Right. So when it comes to business, you have to put emotions on the side and run the business appropriately.
Right.
But that doesn't always happen. Mom and pop business, small business owners, usually they mix business and family matters, which is really a bad way to run a business. Now, if a divorce happens, for example, if you have a situation of partners separating, a divorce happens, you have to get a business valuation expert to do that business valuation.
Very, very important.
And I know the issue here is, should the husband hire the valuation expert, or should the wife hire a valuation expert, or should they, hire separate valuation experts? So so those are things that you have to work out as a couple. Now, most of the time, the main shareholder, the main person who runs the business, is going to hire a business valuation expert to determine the value of the company. Now, the issue with divorce valuation is the issue of goodwill. Let's say, for example, the husband is a doctor, or maybe an engineer who has his own firm. Let's take an example for doctor.
Right.
He has his license, he has his practice. He's been working with a lot of clients, so he have a good client list. He's got a reputation. He's got all these intangible that allow the business to thrive. So people go to him because he is a well-known doctor. They know him. He's experienced and things like that. So there is something called goodwill. So that goodwill is treated differently based on different states. So in some states, the fact that the doctor has a personal goodwill does not count. In some state, it doesn't count towards marital, towards the valuation of the company in marital as marital assets.
Okay.
The state of Maryland, for example, does accept those count, personal goodwill as part of the marital asset. But some states don't count that as marital assets. So the expert have to determine what in each state.
And that's what an expert, he figures that out.
He's going to figure it out. He's going to work with an attorney necessarily to figure it out, that if what happens in this state, do they accept personal goodwill this state or not? So if they don't, or the question is personal goodwill part of the marital asset that could be divided between the husband, right? The husband and the wife, or not? Now, if in that state they've decided that personal goodwill is not part of the marital asset, so the valuation expert is just going to value the company as it is without valuing the personal goodwill of the husband, who is who's a doctor.
Yeah.
So
right.
so that's the situation.
And just I mean that's awesome. I appreciate you sharing that, because so many people they forget. One of my friend was saying, I mean, he said when it comes to divorce court, they split everything 50-50, but they don't split love. They should be splitting love 50-50, but they don't do that. That doesn't happen.
Yeah.
But folks, that's all we got. So I'm glad you came. I wanted to have this situation because I wanted people to understand the reason why they need to look into valuing your company, because there's so many entrepreneurs out there. So many people want to be in business. They want to learn how to be business owners or whatever it is. And they're doing so many different things. And and I preach about creating generational wealth and planning out. But you can't create generational wealth if you don't understand the value of what your business, if you have a business, what is worth, or whatever you have is worth. So you need to know that and how to pass it on to the next generation properly. Absolutely. So that's what, again, Achille, man, thank you so much. Again, folks, make sure you get a copy of the book. I mean, it's $20. Absolutely. Very, very inexpensive. And easy read. I mean, he made it so easy that you could pick it up and read it in 1 day or 2 days, up to you. But the key is 30 frequently asked questions in business valuation. This is things that people are asking. I haven't seen any book out here that talks about this. Just like when I did my book, a lot of people talk about creating generational wealth, and they talk all that stuff, but nobody actually have it down in writing and what you need, steps that you need to do to make it work. Exactly. So again, thank you for making this work for us. I appreciate it. And folks, thank you for tuning in again. If you have questions, I don't see any questions on the chat. So you'll have a great week, and let's keep rocking and rolling. Peace.